Let's find out why the biggest hindrance to your investment success may very well be the person you see in the mirror. Because in today's video, we'll address 3 problems that we have to overcome in order to be successful long-term investors. My name is Stephen Stricklin. I'm a certified financial planner and the president of Wise Wealth. I'm a writer, an educator, and an advisor, and today I'm here to help you. So make sure to sub if you're new, hit the like button, and let's get into today's video. Dalbar Inc. is the nation's leading financial services market research firm. Since 1994, Dalbar's quantitative analysis of investor behavior has measured the effects of investors' decisions to buy and sell and switch into and out of mutual funds over short and long-term timeframes. These effects are measured from the perspective of the investor and does not represent the performance of the investments themselves. The results consistently show that the average investor earns less, and in many cases, much less, than the mutual fund performance reports would suggest. What does all this mean? It means that investors are usually their own worst enemies. This is typically demonstrated by moving in and out of the market, changing allocations, and even overweighting and underweighting asset classes. The problem is with the old adage, don't just stand there, do something. Well, when it comes to stock market investing, one of the smartest things you can do is just stand there and do nothing. If you have not watched it yet, please go back and watch my previous video on watching paint dry for further information on this topic. It's human nature to allow our emotions to drive our investment behaviors. But here are 3 problems that we have to overcome in order to be successful long-term investors. Number 1 is panic. This means that making investment decisions or allocation decisions based on fear. For example, since Russia invaded Ukraine, I'm going to move all my assets to cash and wait it out. Or there's an election coming up, so I will just wait to see what happens. That's investing based on panic. Another mistake is investing based on a panacea. This means making investment or allocation decisions based on greed. This investment is just perfect. For example, this investment is going to solve all my problems because it always grows in value, or this investment always produces a dividend, or I can't fail because this is in a certain hot sector. That's investing based on a panacea, and it usually doesn't work out. A third problem with looking in the mirror and the person that we see in the mirror is procrastination. This means not investing early and often. I've never met anyone who said, I wish I had not started investing so soon, or I wish I had waited to put together a plan for my financial future. No, usually I hear the exact opposite. I wish I had started investing earlier, and I wish I had started planning sooner. So here's the deal. Don't be your own worst enemy. If you choose to be an investor, think long-term, and don't make investment decisions based on panic or a panacea, and don't procrastinate. Put the mirror down and don't worry about that person's emotions. Have a strategy that is based on your needs and goals, and let go of the comparison game or the fear of missing out. If you enjoyed what you learned in today's video, please hit the like button below. And if you would like to hear more content like this, I release videos every 2 weeks. If you hit the subscribe button below, you will be notified every time we drop a new video. So please subscribe to our channel today. Thanks.